Some committee stocks on the move. 3M, please, on the screen. Because it's one of the best S&P gainers today. Stephanie Link, it's a 52-week high.
Yeah.
What do we think?
I mean, I thought the quarter was fine. I didn't think it was great. I'm surprised that it's up as much as almost 6%. But 2024 is in the rearview mirror. They did a lot of restructuring. They did a lot of portfolio changes. They're focusing on costs and operating margin improvement, and they have a new CEO who has a proven track record. I think the guidance was why maybe the stock is actually acting better because of the 2 to 3% organic growth. They haven't seen 3% organic growth in like 10 years. Plus, margin expansion also is for higher for this year. So all systems go, just 19 times it's not as compelling as it once was.
Josh, what do you think about that? I mean, I think Steph makes a real even case here. Good earnings. I don't know if it's justified the move you're seeing today. And I don't know if it's a full valuation, but if not now, it's getting there.
It's not a cheap stock, but there's a reason it's not a cheap stock. When people see a restructuring and a turnaround that actually has traction, they buy. They don't. The valuation almost becomes secondary because nobody really knows what the full earnings power is of a resurgent 3M. It's been like 10 years since we've been able to be excited about the company. The only division within the company that's not growing currently is the consumer side, but transportation, electrical, et cetera. I think the reason the stock spiked so hard is probably that it's a turnaround that you could actually say, hey, this is now definitively working, but also the guidance, expecting 2025, full year 2025 earnings between $7.60 to $7.90. That range is good. Shares are up a lot, but maybe not enough to account for that level of earnings power in this year. And within a couple of months, they're going to start talking about 26 numbers being too low. So I'm in this name. I'm sticking with it. It first surfaced as one of the best stocks in the market for me, closer to like 104 or 105. And I've ridden it the whole way up with the trailing stop. Has not let me down. This name remains in an uptrend. And so long as it does, I'm okay with the 19 PE. I don't think it's the end of the world.
All right, pushing towards 150 today. Steph, back to you. D.R. Horton, they reaffirmed their guidance. They increased their buyback. Their revenues beat. And we can take a look at the stock today as well for what was part of one of your favorite, if not your favorite, or your contrarian play last year, right?
Yeah, it's a contrarian, sure. And I think you need interest rates to come down further. You need 30-year mortgage fixed at 5 or less, not at 7, so it's not in the right direction. But this company is doing all the right things in terms of executing. They beat earnings by 7%. Closings beat by expectations. Gross margins even were better than expected. The stock is muted because the guidance for gross margins is on the lower end side, but stock's trading at 11 times earnings. Oh, by the way, construction times, they said now for the last 3 quarters, improved. Construction lead times. That actually is very positive for Home Depot and Lowe's, and I own Home Depot as well.
Schwab beat, Revs beat, earnings beat. Belsky, you own that stock still?
We love the brokerage business. Schwab's organic business inside Schwab growing. That's the consistent business. You have the RIA business. You have the operational business growing. And the stock was an underperformer first half of last year and really kind of came on. And we really like that name in terms of our value portfolio.
What about Prologis, which was out today with an earnings beat of its own?
This is a company that just got crushed in terms of expectations and have really underpromised. And now they've come up and delivered. We own the stock in our REIT positioning, and especially in our tactical and value.
You want to give me something real quick, Joe, on Fifth Third? We talked about regionals earlier, but let's go specific, if we could, for a minute. They missed.
Well, the headline is that they missed, but they're still approaching double-digit revenue growth. The reaction to the stock is a very positive one, and you've got 3 analysts that have come out, reiterated their outperform or buy ratings.